afternoon, students. In front of you is your accounting tutor, Gertrude Namando, and I'm going to present the accounting didactics that you need to know for your 3 upcoming examinations. I'm welcoming you to 2019. Let it be a year of success. With hard work, everything is attainable. Okay, let me take you through of what is expected you for this upcoming 3 examination. Okay, the format of the examination, normally you write for 3 hours and it's 1:30. This examination is out of 1:30, and it's very important that you answer all the questions and all the subsections. The examination paper is made up in 3 levels. Each question is starting with a verb, and it's very important that you know your verbs when it comes to the examination. These verbs are even provided in your modules. Okay, now level 1, we find the define. Define, you know, you need to give the meaning of something. Describe, you go in details, giving all the features and giving all the stages. When you identify or list, you are just pinpointing. You state, but you don't need to go into details. When you describe, you indicate the relation between things. You are making it clear. You are providing reasons. You are providing examples. You are providing characteristics. And then when you summarize, you give a brief account, and then you clarify. So that was level 1. Level 2, sometimes you demonstrate. When you demonstrate something, you perform a certain operation, and then if you are to propose, you are giving out a plan or an idea. And then in level 2 is where you find keywords like you evaluate, you compare. In comparing, you are giving out the similarities and you are giving out the differences. And then if you discuss, you have to give a reason. You have to give judgment. And then, if necessary, you provide the pros and cons, the advantages or disadvantages. Sometimes they call it the positive and then the negative point. And it's very important that if you are to differentiate, you need to come up with or if you are to discuss, you need to come up with a conclusion. Don't just leave your answers hanging. To distinguish, you are giving out the difference. You are given 2 points and then you give out the difference between the 2. Those are the key verbs that you need to know. And then the examination cover page, students, it's very important that you fill in all your information, and it's very important that you read the instructions. What are you expected to do during that exam paper? You find that in your cover page. And the rest of the instruction there, you can read on your own. Okay, now students, things have changed. It's 2019, it's new year, it's new things. Now, normally in the past, we used to give a presentation for every examination. So you knew what was to come in the May examination because it was a different presentation. August was a different presentation. Supplementary was a different presentation. But now the game has changed. So the presentation that I'm going to do now, it covers your May examination, your August examination, and your supplementary examination. So that means you need to study the whole content, because some of the content will apply to May, some to August, some to supplementary, and however you find in one examination, you might have all the content. So please take note of that. And please don't call me to say which one is in the May, which one is in the what. The instruction is clear, and we are following the IOL policy. Thank you. Okay, now the first topic that I want to talk about is the accounting equation. Now, normally in the accounting equation, the formula is saying assets is equal to owner's equity plus liability. So that means that all the properties that the business owns, you find you have owner's equity, what the owner contributed, and then we find out we have liability. Sometimes the owner does not have enough money to contribute. Sometimes the owner will have to go and borrow money, so we call that liability. So whenever you are doing the accounting equation, that means when we are now talking, the assets must be equal to the owner's equity plus liability. So that means what the owner owes is divided into, some of the money is now going into the owner's equity, some of them is tied up in the liability. Or the formula might change, and then they say asset is equal to liability plus owner's equity. It's just more or less the same thing. And then when you are doing the accounting equation, it's very important that you know the influence of the transaction. Each transaction, it's either going to have an influence on the assets of the business, it's either going to have an influence on the owner's equity of the business, it's either going to have an influence on the liability of the business. I want you to go through page 77. I like that table in the accounting didactic module. It's well summarized. They tell you this, if it's this type of asset, where is the effect on the accounting equation? Like for example, if we look at the transaction, bought vehicles and paid by check. Bought vehicles and paid by check. Now, when you have this type of transaction, it's very important that each transaction you must identify two accounts. Now, the main accounts. Now, in this transaction, we are identifying vehicle, and then check, we are identifying it as bank. So we have vehicle, and then we have bank. Now you ask yourself, this, where is it having an influence on? If we look at vehicle, and then if we look at bank, all these are to be classified as assets. So our influence is only going to be on the assets. And remember, the asset on the vehicle side, because we receive a vehicle, our assets are going to increase with how much? 100,000. That is now the value of the vehicle. And then what will happen to our money in the bank? Our money in the bank is going to decrease with 100,000 because we took out 100,000 from the business to do what? To buy a vehicle, and then on our asset is increasing. So that is now what you do in the accounting equation. When you read the transaction, you identify two main accounts. And then when you identify the main account, and then you enter their influence on the accounting equation. Sometimes you find out one will have an influence on owner's equity, one on the liability. So it's very important that you take note of that. And mind you, page 77, I like the table there because it tells you if you find this type of transaction, they already identified for you the two accounts to be identified. They already tell you ways the influence going to be. But in the past examination, this is a section that students scores mark. It's one of the easiest one. And then if you are to write an examination, on the side of your examination, you can even come up with a T account to help you to know which account is receiving, which account is giving. The one that is receiving, you plus. The one that is giving, you minus. And the next book that I want you to familiarize yourself with is a general journal. Okay, now a general journal, we know in here we record transactions that are not fitting in the other books of first entry. So the types of transactions that are recorded in the general journal, students, if you know this type of transaction, it's very easy for you to do a general journal, because we are just looking out for the transactions like opening entry, bad debt, stock withdrawal from the inventory, donation of goods, interest charge on overdue account. It doesn't go in the other 6 books of first entry. If we purchase fixed assets on credit, interest received on overdue account, correction of error, purchase of consumable on credit, and then the discount granted is cancelled or dishonored. So if you know this type of transaction, if you know them by heart, it will be very easier for you to do a general journal, because when you are given transaction, you are just looking out for these transactions to enter them in the general journal. And it's the first step is to read and understand the transaction. Read the transaction at least twice. If necessary, read it 3 times. And then when you understand the transaction, you identify the 2 accounts from the transaction. What are the 2 accounts? And I want you to reach page 137 to 140 so to revise these accounts. And then it's also very important for you to know where does it increase, where does it decrease. Apply the double entry principle. And then it's very important that you do what? You identify a narration, or they call it an explanation. So very important, you identify the 2 accounts, know which one must be debited and which one must be credited. We are applying the double entry principle, and then you give the narration. Now, for example, if the transaction read as owner took goods for his own use. Accounting language, if owner took goods for own use, we are calling that drawing. So that is our first account. And then the other account is what? Purchases. Purchase. So now, which one is receiving? The one that is receiving, you debit it. So the drawings is receiving, you debit it. Purchases is giving, you credit it. And then now you give out a reason explaining what is happening there. What you wrote there, what is happening. The owner took goods for own use. That is a narration. And please, students, when you are writing this, you must write it in 3 different rows. Drawing must be written on its row. Purchases must be written in its row. And the reason must be written in the last row. And mind you, some of the students will identify drawings and purchases, but then when they write the amount, they mix it up. Or the amounts are not in the same columns, and then you don't get a mark for that. Drawings, the amount, debit, you get a mark. Purchases, the amount in the credit, it's 1 mark. And then owner took goods for own use is 1 mark. If there is no reason, you lose out a mark. And then the books of first entry, it's very important that you read through the books of first entry. These are is where you can score marks in accounting. Cash book, we must know that there we enter the cash and check transactions. That is a cash book. We are only dealing with cash. Debtors journal, we must know that there we enter the credit sales. Our credit customers, we enter them in this book. When they return things, we enter them in the data's return journal. Our credit purchases, when we buy goods on credit from the supplier will record that in the creditor's journal. When the credit purchase, when they return thing, the supplier will now enter that in the creditor's return journal. And then the general journal, like I said, all the books that are not fitting in the books that I read, they must go in the general journal. And then we have the petty cash book, where we enter the small payment, the small money that we have in the business on a daily basis. We enter that in the petty cash book. Those are the books of first entry. And then when the transactions are taking place with the books of first entry students, it's very important that you know the definition. I have just given you the definition. It's very important that you know the source documents. All the books of first entry, they've got the source document. If the customers buy cash, what do you get? It's either you get a receipt. When the customers buy on credit, what do you get? It's a credit note. It's very important that you know the source documents. And then it's very important that you know where to record the books. Because sometimes they give you mixed transactions, and then out of the mixed transaction, they ask you, draw up a cash book, draw up a debtor's journal, draw up a creditor's journal, draw up a general journal, and then you do the posting to the general ledger. So if you don't know which transaction goes where, it will be very difficult for you. And then, as I said, the general ledger, when we are posting even to the debtor's ledger, it's very important that we do what? You balance of your books. If it's more than one transaction in a book, you balance it off. Read through page 99 to page 116. And then from there, when you have posted the information to the general ledger, the next book that you must do is the trial balance. Now the trial balance there, you just want to check the correctness of your posting. So now there you take things and then you put it as they are. Then you just put it up in the trial balance and then you add up. Now if the amount agrees, if the debit side is equal to the credit side, and then your posting was correct. But if the amount does not agree, there was an error made somewhere, so you go back, you check the amount as it's appearing in the general ledger. Is it the correct amount as it's appearing in the trial balance? However, with the trial balance, you find errors that are not affecting the trial balance. The thing is just maybe entered in the balance sheet account. Let me say it's an expense, and then you enter it in the balance sheet account section, but you enter it on the correct column. Your trial balance is going to balance, but there is an error because it's not supposed to go in the balance sheet account section, but it's supposed to go in the nominal account section. And then, however, you find errors that if there are those errors, your trial balance is not going to balance. I want you to read through those errors on page 169. And the next thing that I want you to know is the accounting ratios. The accounting ratios. When businesses are analyzing the financial statement, we want to know answers to certain questions. Like, is the business profitable? Profitability ratio. How well does it control the expenses? How efficiently is it operating? So that is now the reason why we do ratios. Or you want to compare your business. You want to compare it with other businesses. That is why we do ratios. So I want you to read through page 337 to 343. There they have given you different ratios, and students, please, very important when it comes to a ratio, you must start with the formula. Memorize that formula, student, because if you don't know the formula, in the examination they only give you the figures, and then they will ask you calculate the current ratio, calculate the profitability ratio. You are only going to know this when you know the formula. Please, I press on you, know the formulas by heart. Because if you don't know the formulas, you have figures, but you cannot do anything. And it's given on the page 337 to 343. Read through that. And then the general comments. I want you to cover the syllabus. You are provided with the syllabus when you register. So cover all the information that is given in the syllabus. Read through the rules of accounting. Assets, you must know where does it increase, where does it decrease. The same applies with owner's equity, liabilities. You need to know how to calculate the working capital. You need to know the formula. I want you to know these formulas by heart. You need to read through the depreciation and the calculation on it. Remember, we have the straight line method. I want you to go through this method. I want you to read through the qualities of a good teacher. You need to read through the theory of the teaching methods. You need to read through the theory on the computers and accounting system. You need to read through the petty cash book. Read through the behavioral problems. And then you need to go through everything. I want to emphasize again, students, the presentation that I just made for accounting didactics is not only for May examination. This presentation will apply to the May examination, to the August examination, to the supplementary examination. So you need to know this. They will pick content, some content for the May, some content for the August, or you even find the question paper that will cover all this. So it's very important that you read through this, but very important also through the syllabus. I'm wishing you all the best for the accounting didactics journey. I've provided my email. Please feel free to contact me if there is anything that you don't understand. I thank you.